Today I'm going to talk about how separating insurance and investing should lead to optimal financial outcomes. As Charlie Munger, Warren Buffett's partner for over 50 years, quotes, "If you mix raisins with turds, they'll still be turds." This is typically what happens when you mix investing along with insurance. Some of these schemes get garbed and gets sold to gullible investors, especially parents, as assured returns or guaranteed return schemes in the form of child protect, wealth, education, marriage, etc., by the relationship managers or agents. However, these RMs or the agents never tell the return which the investor would generate every year for his investment horizon. A typical conversation goes something like this. RM: Ma'am, considering that you have a child, you may want to secure her education when you are wanting to send her abroad for further studies. How old is she? Parent: She is 11 years old. Well, most Indian parents would be overwhelmingly agreeing to do this. Who doesn't need a foreign degree tag for their children after all? RM: Oh, great. Considering that she is 11 years old, you can look at an investment horizon of 10 years. She would have completed her graduation by then. A large kitty, when she's 21 years old, will enable her to pursue her dreams in any of the Ivy League colleges outside India. Parent: Sounds great. Can you suggest some plan or somewhere I can park funds? But I need assured returns. I don't want to risk this by investing in something which I don't understand. RM: Sure, I completely understand, ma'am. This is something which obviously needs to be very secured. Any of the Ivy League colleges will cost at least $200,000. So, your investment corpus should be approximating to that amount in 10 years from now. This ABC scheme is great. It not only gives you your desired amount at maturity, it also provides you an insurance coverage of 10 times of your yearly premium amount. Premium payment? How come? Wasn't this supposed to be an investing product to begin with? Parent: How much do I need to invest? RM: You need to invest close to $16,000 every year for the next 10 years. End of conversation. The parent obviously never calculated that investing the above amount translates to a return of meager 4.5% per annum for the next 10 years. That's it. Lower than fixed deposit rate in few cases, at least till some time back. But who cares? RM, of course, does not. And who calculates? The parent obviously does not. The parent feels happy that she should get the desired assured amount for her child plus an added protection of insurance. This has been garbed as child protect slash wealth slash higher education slash marriage scheme after all. This is exactly what happened to my friend when she visited one of the banks some years back. The return from that investing insurance product has been a paltry 4% per annum, and the RM has been gunning to sell something similar, more exotic sounding once again. After all, who doesn't want to skim the cream? So, where does one go from here? Simple. Treat investment and insurance separately. In the above example, if you were to separate the yearly premium of $16,000 into two distinct components, that is insurance and investing, you would tend to get much higher and much more optimized outcomes. Quick calculation. Even if you were to put 15% of the $16,000, which was being proposed to be invested in one of those garbed ABC schemes, it would translate to $2,500 a year. Yearly premium of this amount in a term plan would give you an insurance coverage of approximately $1.25 million. This would be way at least 8 to 10 times of the insurance coverage of that garbed scheme. Now with the remaining $13,500, that is 85% of $16,000 to be invested annually, if you were to invest in equity markets at the end of 10 years, you would be sitting on close to $265,000. Assuming 12% CAGR returns over the next 10 years. Now this is $65,000 which is higher than the assured amount of $200,000, which the RM had promised. So both your investment coverage as well as your returns at the end of 10 years will be far higher than the assured raisin and turd scheme. Need I say more? By the way, my friend never invested in these schemes ever again. Hope you enjoyed listening to this. For more interesting topics, you may check out my website www.jagrav.com, that is jagrav.com. If you want to reach out to me, you may email me at vikas@jagrav.com. Thank you. Have a good day.